Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel, and welcome to our regular Friday weekly precious metals market recap and our look ahead over the next week or two for gold, silver, and the miners. Well, interesting week in the precious metals patch. We had gold and silver were down on the week, yet GDX was higher by almost 1%. GDXJ up by 2% on the week. SILJ, the silver juniors, also were higher on the week. So good week for the stocks, even as gold and silver were correcting. Gold, it's still in a long-term bullish correction / consolidation. That's going to continue at least for a couple more weeks. Let's get to the video. So starting off here, we have our market overview of several different markets and indices here. You can read gold, silver, gold against the stock market, GDX, GDXJ, SIL, SILJ, the silver juniors. Here's the stock market, and here is the yield curve. Let's talk about some macro. In the yield curve, if this were to break above 0.6 and push higher like that, that would probably because the 2-year, which the Fed funds follows, that interest rate could plunge lower if we get some more worries about the economy. And then at the same time, of course, you see this baby move higher like that. If we get an accelerated move like that, that can indicate not only rate cuts are coming, but a recession at the same time. Now, this thing for a while, it's been inching higher. It's been threatening to have that accelerated move to the upside, that real steepening that signifies recession and a bevy of rate cuts coming, but it hasn't quite materialized yet. Maybe it won't happen in the next month or two, but just keep an eye on this. So this is a week or two to keep an eye on the bond market and the various yield spreads. With respect to the rest of the overall market, gold, here we can see this is the spot market here from the CME. And look, this is a bullish consolidation. It's continuing. It could come down here to 3175, 3200 and still be in a bullish consolidation. Here's the 200-day right here. That will continue to come up like this. I do think there is a growing risk that at some point it could test the 200-day moving average. Now, even though gold could potentially correct more and have that kind of downside, again, potentially, look at how the stocks are acting. GDX, GDXJ. I mean, GDX, big move up last week. What do we see? Weakness being bought. This looks like a bull flag. Who knows? Could be a bull flag. GDXJ even a little bit stronger than GDX, as we noted at the outset. Silver stocks as well. There you can see so far they're digesting what was a really strong rebound last week. Stock market did make a higher high. Gold against the stock market. You know, I love these ratio charts. That continues to hold just below the declining 50-day moving average here. Here's the 200-day. So we'll see at some point. I would expect this to pop higher and transition from a downtrend to, you call it neutral, and then eventually a short-term rebound. And you do have this 0.54, 0.55. So that's a really important level. I'll get more into that. So that's the big picture look. Let's drill down specifically on precious metals, gold, silver, and the stocks. Okay, so here's gold. This is the spot market. I love stock charts, but they change their data, so the chart looks a little different. The futures market right here peaked at this level. So that's why you might be seeing a different chart. So gold sold off. It's weekend. Maybe this will come down here and test this 3275 level. Will it get a strong bounce, or who knows? Maybe it could trickle a little bit lower down here to the 150-day or even eventually to the 200-day moving average. Now, people, I've said it before at various points in the last 4 or 5 months. Every time gold has made a big breakout move, its first correction has tested the 200-day moving average, or the times it didn't, the 1 or 2 times it did, it came within 3%. So it got very close. So that's why we're keeping an eye on this, the 200-day moving average here, because at some point, this could get really close, maybe even test the 200-day moving average. So keep that in mind for the next month or two. And I've also said this, you look at what happened after the other 2 biggest breakouts in gold's history, 2005, 1972, which are most comparable to where we are now. What happened? They corrected for 4.5 months and 5 months respectively. And so this here would be 5 months. So we're only at about 4 months for this current correction. And based on this price action, this to me suggests probably going to last another month. That's just my guess. So here's gold against the S&P. I mentioned it before, a move above this level here, call it 0.54 or 0.55. That would signal a new short-term uptrend. But right here, the last month and a half or 6 weeks, we can call this basing and bottoming. So this is really strong support right here. But again, at some point, we will expect this to move up like that. And who knows? Maybe the catalyst will be the Fed resuming its rate cuts. We'll see. Now, moving on, let's talk about silver. So yes, this is the spot market for silver. And the one big difference is if you look at the futures market, the continuous contract, these lows right here were a perfect retest of this breakout. So this spot market is a little different. So we had this perfect retest, then a move up to almost 40, missed it by a hair, came back down, made a higher low. Now, last couple of days, I'd say after Wednesday, I really like this candle on Wednesday. I'm hoping that this could trend up here to 40 and maybe it corrects and consolidates a little bit. Or maybe it fights its way to 41, 42, like we've talked about. And then you get more of a correction for a couple of months after that. So with respect to silver, it's finding a little resistance here in the upper 38s. So there is resistance, 39.40 before that 41, 42 level. Really good support here, I would say around 36.5 or so. Here's the 200-day moving average for silver. So this baby is going to come up like that. Gold-silver ratio. So silver has been outperforming. We'll see what happens. I mean, if this were to turn up like that, maybe that suggests that silver could come down like this to 36 before gold finishes its correction. But I'm just thinking out loud. Now, before we get to the stocks, I'll try and keep this brief this time. Those of you who have subscribed to the Daily Gold Premium, I appreciate you and your business. And I know many of you have. Those of you who have not subscribed to the Daily Gold Premium, if you own juniors or you own minors and you're looking for assistance and some expertise in selecting the right companies, the stocks that have 5x to 10x potential in a cyclical bull market, our focus is not on penny stocks that are really speculative. We are looking for the smaller companies. Yeah, they're established and they have quality projects and they're adding value to these projects and they have potential to be market leaders over the next 2 years. Those are the stocks that we are looking for. We want to get you into those stocks at the right time. And people, it's all about finding value and buying value. That's how you can lower your risk, even if the sector is correcting or there is that risk of a larger correction. So again, those of you who have subscribed, thank you so much. Those of you who have not subscribed yet, we'd love to have you come aboard and take a chance. It's only $150 for 6 months. If you don't like it, you can cancel after that. But we think you will. Thank you. And let's move on to the rest of the video. Okay, so these are the weekly candle charts for GDX, GDXJ, and GOEX. GOEX, again, I've said it before, this to me is a more accurate reflection of the junior sector because GDXJ has 5 or 6, 7 stocks they're mid caps. They're just way too big. So I prefer this index. But anyway, I'm showing all three. And what's really interesting is even though gold and silver sold off, they were down for the week. Look at the weekly candles for these indices or these ETFs. Look at that. After last week's explosion, bullish candle in GDXJ. That's nice. Same thing in GOEX. So these, after last week, you had an explosion, closed at the high of the week, or very close to it. That's bullish. What happened this week? Another white candle that closed near the high of the week. So there is more buying pressure coming in to these junior miners. Now, moving on, I don't want to forget about silver stocks. So here we have SIL right here, which is the large silver stocks, SILJ, the junior silver stock ETF. And we noted last week, look what happened. That's a breakout from a 12-year-long base. Look at that candle last week. Oh, and this week, a white candle. Same thing in SILJ, where you had the explosion last week and another white candle. Although SILJ, the silver juniors, have not quite broken out yet. But at some point, sooner rather than later, we would expect this thing to break out. What's the upside target or potential measured upside target for this breakout? we are looking at, I believe when I measured this, it was about 70, but it could potentially be 75, depending on how you measure it. So call it 75. SILJ, even if we're just measuring from here, that goes up to potentially 27. If we measure from all the way down here, that's 4.5 to 18 or 17.5. So that takes it to about 30, 31. So doesn't mean it's going to happen in a month or two, but there is a lot of upside potential in the silver stocks because of the technical breakouts that we see here. Now, moving on, what's really powering this right now? Because silver has been trending higher, but hasn't really exploded yet. Gold, we know it's been a correction for 1.5 months of bullish consolidation. So what's really powering this? Well, the stocks are outperforming the metals. They're not only outperforming the stock market, but we can see here GDX against gold right here. And this is SIL, the large silver stocks, against silver. Here's GDX against gold. We can see here, this is the 200-day moving average here. Beautiful breakout here. This is potentially a double bottom here or a complex inverse head and shoulders pattern, but the measured upside target is up to actually, this should be a little higher, closer to 0.20. So this is a key breakout. And here is really significant resistance. So this is going back 12 years, GDX divided by gold. So this breakout here, it's probably going to continue up to the red line before we get a serious pullback. SIL, silver stocks divided by silver. So the measured upside target, call it about 145, depending on where you mark it. So it's basically nearly there already. But this type of strength, I would expect this to continue probably into this area right here. That's where it should find some resistance. But analysis aside, the larger point is the stocks are outperforming the metals. Why is that happening? Well, fundamentally, the inflation-adjusted price of gold several months ago broke out. It is in blue sky territory. Remember, it broke out of a 45-year-long base. The inflation-adjusted price of silver, I believe, last month broke out of a 13-year-long base. These are incredibly significant breakouts. So we're at a time where miners are not seeing cost pressures, primarily because oil hasn't moved yet. Oil remains low. And gold and silver are trending higher at the same time. So margins for these companies are really getting fatter. But here's the thing. If margins just remain where they are, they don't even have to move higher. If they remain where they are for the next couple of years, miners and juniors are going to absolutely crush it. They're going to absolutely crush it if margins remain where they are. So we're in a really good situation. But at the same time, as I always say, buy value, buy value. You don't want to chase rhino horns on those charts. Buy value. Okay, so things look good for the sector. They're trending really well. Where's the risk? Where's the chink in the armor? So let's look here. Breadth in GDX and the large companies is way too strong right now. So here's GDX, and we can see closed at 58. This has a measured upside target of 63. It could hit that in the short term, 63. Now here we show the new 52-week highs for GDX. Down here, we got the bullish percent index, the golden cross percentage. These are breadth indicators. So they're participation indicators. We want strong participation, but we don't want it to be too strong and to be too strong for a long time, because that means the market is extremely overbought and needs to correct. And so we can see in the past when you had an explosion in new highs here, these were interim peaks in the sector. We can see here, this is the 50-day moving average of the percentage of stocks that close above the 200-day moving average in the Huey. The Huey is GDX minus the royalty companies. Look where this is right now. The 50-day moving average of the percentage of Huey stocks above their 200-day moving average, it's almost 100%. It's at 99 right now. So this is all the way up here. This is not quite at these extreme lines. It's 14%. So it does have some room to run. These, I think, are 25, around 25 to 35%, 25 to 30. So we'll keep those in mind. And you look at these down here, Golden Cross Bullish Percent Index, 100. So what happens when these get too high? You get an interim peak in the sector. So there is some risk here. My guess is if we see this go up to 63 or 64, 65 in the next couple of weeks, maybe we have an interim peak there and then we start to see a correction. So keep this in mind. This is why it's important that you can't chase things and you really have to buy value, especially right now. Buy value. So that is the risk. But of course, we monitor this all the time at the Daily Gold and the Daily Gold Premium. Now let's wrap it up here looking at the daily candle charts for GDX, GDXJ, SILJ. Look at these candles. This looks like a potential bull flag for GDX. GDXJ had more selling here. Maybe it's not a bull flag, but look, it already closed at a high. This is already broken out here. This is a positive divergence in GDXJ. SILJ, this gap here does worry me a bit, but so far this is fine. So the short-term setup, very short-term, you can potentially get a move up here. This would take you to that 63 target. I believe the measured upside target from the long-term breakout for GDXJ is about 81, 82. So keep that in mind. So short-term, if we just explode higher, this moves towards 80, this gets to 63. That could be at a level where we could see breadth really blow out and we could be at an interim peak. So we'll keep that in mind over the next couple of weeks as we get past Labor Day and into September and the start of school. That was a long video. Hope you all had a great week. Let me know what you think. Leave a comment. Would love to hear from you. I'll try and respond to as many as I can. Thank you so much for tuning in. I appreciate you and your support of this channel and hope you have a great weekend ahead. We'll see you in the next video.